Hello, good morning, ladies and gentlemen. Happy Friday to you all, and welcome to yet another session of our morning technical analysis. And it's the last trading day of the week, actually, and we are going to be doing some rounding off on all the pairs that we have been monitoring since the beginning of the week. And there is a psychological peculiarity about Friday's last trading days of the week, last trading days of the month, where majority in the market who are taking advantage of a potential move will definitely want to be doing some profit taking activity. And this normally reflects on the chart as price action moving in the opposite direction of the prior leading price action. So we are going to be looking at how we are going to be managing our existing trade while taking all these psychological expectations into consideration. And today as well, we are going to be looking at the economic calendar to see what we're actually looking forward to, as we have a handful of macroeconomic events that will be having a significant impact on price movement. And in the last 24 hours, we have been quite profitable on most of the pairs that we have been monitoring, and congratulations to everyone. So we are going to be looking at how we went by with all those trades and how we moved our stop losses, how we manage those existing trade in that regard. And so in the last 24 hours, actually, we have seen the dollar skyrocket a little bit after some positive signs that we might likely be having a resolution as regards the US debt ceiling saga. But since the beginning of this morning, the US dollar has been relatively calm against the major currencies that we have been monitoring. So we are going to be looking forward to that one as well. Now, here we are on the economic calendar, and you know how we do it. I normally focus on high impact events affecting the currency pairs that we are monitoring. So we are going to be looking at high impact events affecting the US dollar, the pound sterling, and the Japanese yen. But today I had to do a little tweak by including the medium impact event, and the reason why that is simply because of this personal consumption expenditure, which is coming up in about 3 to 4 hours from now, and it's normally used as an inflation gauge. So that is why I want to include that into our purview for the economic future for today. So let's quickly run through the economic calendar. Let's see what we are looking forward to. Today, I can see Kwaku Anim. Good morning to you, Kwaku Anim from the United Kingdom. Trust you are doing well. And I'm so glad to have you around too as well. So let's dive right into the business and let's see what is really going on, what our expectations are as regards the economic calendar. So the first medium impact event isn't coming until 12:30, which is about 3-4 hours from now. And this index gives an average amount of money that consumers spend in a month. So it lets us know how much consumers spend in a month, and it is considered to be a significant indicator of inflation. And obviously, the Fed will be looking forward to see what this data will be, as it will have a major impact in deciding if there's going to be a interest rate hike in the coming month. So this is one event that majority are looking forward to, and as you can see here, we have a previous data coming in at 0.3%, and we have a consensus projecting that it will still be the same at 0.3%. So we are going to be looking forward to what the actual data is going to be like for today. And then we also have the year-on-year data for the same core personal consumption expenditure, which is also the same here. 4.6% was the previous data, and the expectation is a 4.6% too as well. Then we have a high impact event, that is the durable goods order, which is normally released by the US Census Bureau, and it measures the cost of orders received by manufacturers for durable goods order, which means goods planned to last for 3 years or more. So these goods are goods like motor vehicles and appliances. So it's another major impact event that will be telling us the health status of the manufacturing sector in the US. So this is one event we are also going to be looking forward to, and we have a previous data at 3.2%, and we have a general consensus projecting a -1%, which is on the negative side. So we have a general consensus that are projecting that the manufacturing sector didn't grow. Instead, it dropped. So we are going to be looking forward to what the actual data is. And this is a good sign that we might likely be seeing a drop in the dollar for today. So we can't conclude right now, but let us have it at the back of our mind that this is a possibility that could happen, as we'll still need to look at the technical structures to identify what is really going on there. Then we also have the non-defense capital good order, which is another key economic indicator, and also released by the US Census Bureau, and it measures the cost of orders received by manufacturers for capital goods. So these goods excludes the defense and aircraft sector actually. So it's another impact event we are going to be looking forward to, and we have the previous data coming in here at -0.6%, and we have a consensus projection of -0.2%. So it's quite on the high side there, a little growth in that regard. We are going to be looking forward to see what the actual data is going to be like. So beside this, we also have the personal income, which another economic indicator that we also want to look forward to, as well, as this is the measure. This measures the total income received by individuals from all sources, including wages and salaries, interest, dividends, rent, workers' compensations, and all the likes. And it gives us an insight into the US employment status, which also we want to be anticipating to as well. And this is coming up in about 3 to 4 hours. I think all these events are going to be coming in simultaneously. And what this simply means is that during this time frame, we are likely going to be seeing a very volatile activity in the market. And as a result of this, we are also going to be putting this into consideration while we review the current market structures that we have been monitoring, and see how we can secure our positions, be on standby to catch any potential opportunity prior to the event, during or after the event. So with that being said here, let's dive right into the chart and let us look at things from a technical standpoint. So as usual, the first commodity we are going to be looking at this morning is going to be the US oil spot. And on the US oil spot, we have had quite an interesting situation here in the last 96 hours. Since the beginning of the week, we have been quite profitable. There are moments where we bought, and there are also moments where we sold to as well, to scoop in quite some profits on this commodity. So let's look at how the week started for us on the US oil spot. And the first thing we did here at the beginning of the week was to acknowledge our key level, which obviously was situated at the $71.50 level. And with this situation here, you know how we use our key levels. It always gives us an insight into how we are going to be positioning ourselves ahead of the week. So at the beginning of the week, we identify this level, and you know how we use it. If price action trades above our key level, we want to look out for structures that will support a bullish momentum. And if price action breaks down the key level to the downside, we want to be looking out for structures that will support a bearish momentum. And if you look at what we have on this chart here, you will see that since the beginning of this week, price action had remained above that key level to emphasize the level of strength the buyers have during the course of this week. So we had the situation here at the beginning of the week where price action was initially ranging between the $71.85 and the $70.65 area, giving us a little choppy situation. And you know how we do it whenever we have this kind of simple flat channel. We want to remain patient, waiting for a signal to come in the form of either a breakout of the resistance line for buying opportunity or the breakdown of the support line for selling opportunities. And interestingly, we had our buy stop order above that resistance line and our sell stop order below the support line, which the sell stop was never triggered at any point in time as we saw price action break out. Our resistance line did a couple of retests of that structure to further emphasize the level of buying pressure around that area. And since then, price action had continued to find higher highs in this market. And another thing that we also laid emphasis on, I think, on Tuesday/Wednesday was this trend line here, which price action had consistently respected since the beginning of the week. And one thing we agreed here on the during our Thursday live session was the fact that as long as price action remains above our trend line, we continue to look out for buying opportunities in this market. But one thing we also said here yesterday was the fact that the continued selling pressure we noticed around the $74.40 level has a very high chance of breaking down that trend line. And this is exactly what we saw. I think during our live session yesterday, we saw the breakdown of the structure, and the market gave us the privilege of, if we had missed out on that first position, we had the privilege of joining again, had the retest of that structure, and since then price action has been dropping to the downside. And with this whole situation we have here, congratulations to everyone who had been part of the sell move. As you can see, the first position moved over 250 pips. The second position, after price broke down the structure, moved about 150 pips in our favor before this whole choppy situation began. And I do hope that you moved your stop loss accordingly to lock in some profit. And if you had done so, you must have been out of the sell position at this point. But if you are still in the sell position right now, I'm going to be advising you to move your stop loss accordingly to secure this current position, as anything could still happen in this market that will incite a bullish momentum. And an area I think you should be moving your stop loss here should be somewhere just right above the $72.20 level, in an attempt to give price action to breathe, hoping that price action will still go to the downside. So with a secured position right now and getting ready for the London and New York session today, what is really going to be our plan? Well, the first thing you will observe here is the fact that as soon as price action got back into our key level at the $71.50 area, you will see that we have been witnessing buy pressure since the later part of the New York session yesterday. And this is a clear sign that buyers are still very present in this market. And if we compare what has been happening around this area in the past, going to as far back as let's say as far back as the beginning of this month, you will see how that level had been a major determinant of price action. And if you recall, this level was our key level for the week. And one thing we all know is when price action remains above our key level, we definitely want to be looking out for buying opportunities. And remember, at the beginning of the week, we bought above the key level, as you can see here. And it appears that price action has come back to do a retest of that structure. And another thing I would like to let you know here is there is a structure here on the 4 hours time frame which also supports this confluence that we have here. So let's scale up a little bit into the 4 hours time frame. And if you recall vividly, at the beginning of the week, we acknowledge the fact that price action has been bearish since last month. And to emphasize the strength of the sellers, remember, we connected a series of lower highs, which gave us this resultant bearish trend line that you have on your screen right now. And if we zoom into what happened this week, we saw our price action broke out of that trend line for the first time in over 7 weeks in this market. And from a technical standpoint, when price action breaks out of a structure, we expect that it will at one point come back to retest that structure, which it appears it is doing right now. And we have been seeing some choppy situation, giving insight into the potential build-up of buying pressure around that area to incite the second wave of the bullish momentum that broke out of that bearish trend line. So at this point in time, things are looking very, very bullish. So as long as price action remains above our key level, we continue to look out for buying opportunity in this market. So now, how do we intend to position ourselves for this potential move to the upside? So scaling back down into the 1 hour time frame, so I will be zooming right into our center of focus for today, which is just right within the $71.50 level, our key level for the week, and the $72.50 level, which is the pink line you are seeing on your screen. Now, if you notice what has been happening here following the impulsive move that brought price action into this level, we saw how price action appeared to have transitioned into something that looks like a reversal pattern in the form of a double bottom structure. And you know how we do it. Whenever we identify the possibility that price action could be doing a reversal at this point, the next thing we want to be doing is to identify the neckline, which we are going to be using as a platform to validate the potency of that reversal pattern. And a breakout retest of that structure definitely will be a sign that we are looking forward to buy this commodity at this point. So with the neckline sitting at the $72 area, another strong psychological level, which has been a major determinant of price action in the last 24 hours in this market, we want to see price action break out, retest that level to give us confirmations of buying the US oil spot for today. So what we want to look out for at this point is price action breaking out of the neckline, which it has done already. We've seen price come back to retest of structure, so we could risk something here by placing a buy stop order above the $72 area with the hopes that price action will continue to the upside from this point. And if price action goes on to break out the $72.50 level, this will also give us an opportunity to add more position to our existing trade. Then we continue to ride the move all the way to the upside. And remember, we also have key structures at the $73.50 area, which we can also use to add more position if price action ever breaks out of that level. And where will our stop loss be at this particular point in time? Well, based on this current structure, our stop loss should be somewhere around the key level, probably above it, anywhere around that area, dovetailing to about 45 to 50 pips thereabout on that regard. And let's see how far this bullish move is going to go. So I think we can still afford to risk some of the profit we've made so far this week to test the waters around this area to see if we really do have a reversal pattern unfolding at this point. Now, in as much as we're looking out for buy positions in this market right now, I'm also of the opinion that we also keep tabs with the potentials that sellers could also come in. And if we consider the impulsive bearish move we saw in the last 24 hours, it is quite reasonable that we also take into consideration what we are going to be looking out for to put on a sell position in this market. Now, the first thing I would like to do here is to first of all identify a trend line which we are going to be using to guide our trading activity today. And if you look at what has been happening since the New York session yesterday, we can see we had a low here, we had a higher low here, and it appears that a higher low is gradually forming at this particular point in time. So we want to connect the series of higher lows here to give us a trend line, which obviously we shall be using to guide our trading activity for today. And one thing about this trend line is that it helps us to feel comfortable in whatever position we are in, and it also helps us to give a signal if the momentum is about to shift. So this is a very important trend line we are going to be using today. So I will thicken it a little bit so that we can see it clearly and further emphasize its importance at this juncture in the market. So as long as price action remains above the trend line, we shall feel comfortable on the US oil spot buy position and look out for more opportunities above this level. However, if at any point in time this trend line is breached in such a way that price action breaks down the trend line, then at this point we want to consider selling. But we don't want to get too excited. Remember, anything could still happen. It could be a false breakdown. So we want to see price action retest that structure, giving us a confirmation that sellers are gradually gaining momentum. So what we want to see here is something like a retest of the structure, or it could even go as far as the $72 area. We look out for continued selling pressure, signs that buyers are finding it difficult to break above the $72 area. Then at this point we want to consider selling at the US oil spot. And remember, all this observation is going to be happening on our lower time frame. It could be the 15 minutes, 10 minutes or 5 minutes time frame. Look out for this kind of structure and then we sell. Then at this point we can actually have a sell stop order below the $71.50 area to be part of another wave of bearish momentum to the downside. But with the way things are looking right now, I'm of the opinion that price action is likely going to be going to the upside, but that is just an opinion. Structures in the market will definitely give us an idea of where price action will be going. So if it so happens that price action drops, then we want to get ready to sell. But as long as price action remains above the trend line and the potential neckline we just identified at the $72 area, we shall feel comfortable in our buy position. So this is what we shall be looking at on the US oil spot for today. If you have any questions, feel free to let me know in the comment section, and trust me, I'm willing to be of help. And if you are with me on my TradingView and Telegram platform, obviously you are going to be getting an update as at when due. So with that being said here, and in the absence of no questions, I want to assume that we're on the same page here. So I will be moving on to the next pair. So the next pair we are going to be treating this morning is the GBPUSD. So on the GBPUSD, let's see how the week has started for us. Though we have been quite profitable on this pair this week so far, though we really have not seen a huge traction, in the sense that we didn't last long in most of the positions that we took, as price action probably moved for a moment, then dropped back into our entry zone, giving us an insight into the level of indecision in this market, though price has been bearish actually. So let's run through how the week started for us on the GBP USD. Now, the first thing I would like to say here is that we had a key level, had a 1.245. So if you do want to see how we got to this point, having a key level at the 1.245, you might want to watch my video which I shared during the course of the weekend, as I did a top-down analysis of all the instruments that we are talking about today. So basically what we do here on the live session is to deliberate on the 1 hour time frame because of the time I have with me. So if you really want to have a background knowledge of how we got to this point, you might want to watch that video. It's right in the description box below, and it has timestamps where you can easily navigate through whichever scope you want to be focusing on. So that is that there. So let's go back into the chart. So we had our key level at the 1.245, and you know how our key level serves as a yardstick to guide our trading activity. So as long as price remains above the key level, we look out for buying opportunity, and if price action remains below the key level, we look out for selling opportunities. And if you look at what has been happening this week so far, you will see that price action has most of the time rejected the key level. At every point price action comes into that area to incite that sellers are really strong at this juncture in the market. Now, this is what we saw at the beginning of the week. We saw a little chopper situation just right above that key level, signs that buyers are trying to push price to the upside, but this never lasted long. As you can see, we saw a choppy situation. Price at no point in time broke out of that resistant line at the 1.24720, but instead we saw price action broke down the support line here, which also shares a confluence with that key level, and since that moment price action had continued to range and trading right below that level, emphasizing how strong the sellers are in this market. So we had the privilege of selling. We sold. We even added more positions, had the breakdown of key structures like the 1.24150. We saw how price action came back again to retest the structure. We sold again below the 1.21450 yesterday. I think this was on Wednesday we had this position triggered, and during our live session yesterday we acknowledged the 1.23720. As we said, anywhere below the structure is going to be where we are going to be looking out for selling opportunity. And look at what happened throughout yesterday's trading session. Price action remained below that structure, also trading below the trend line there to emphasize the strength of the sellers at this point. So for those who had been part of this trade, well done to you for being on standby as we saw price action go to as far as the 1.2310 area before we begin to see buy pressure resume. And if you had moved your stop loss accordingly, definitely you would have been taken out with some small profit, if not that significant at all. So at this point in time, getting ready for the New York and London session today, what is really going to be our plans? Well, we can see here that it is quite obvious that since price action tested the 1.23100 area, we saw how buy pressure resumed from that area, hereby giving us a simple setup here that's looking more like a reversal pattern in the form of a double bottom structure. And as you can see, price was unable to break the previous low, giving us a new high, and at this point the neckline at the 1.23320 level triggered an opportunity to buy. And some of us will have missed out on this opportunity, though I shared an update here this morning that if price action ever comes back to retest that structure, we are going to be looking out for buying opportunity. Let me show you the update here on my GBPUSD trading view platform. So I shared a commentary this morning on this pair. So let it load up and let's see what I'm talking about here.
Hello everyone.
Okay. So this was how we have been trading the GBPUSD since the beginning of the week, with daily commentaries highlighted here. And so we want to see what happened yesterday, how we traded yesterday, and what I said this morning as regards the new setup we have here. So this was yesterday's trading session, and this was how we joined the bearish move to the downside. So this morning here, I made mention that price action takes out all sell positions with profit as buy pressure appear to resume. So I said here that we are going to be buying a retest of this level. That is, if you had missed out on that breakout, personally I missed out on that one. It was midnight here when this whole thing happened, so definitely I wasn't around to be part of that move right there. But if you are taking advantage of that move, well done to you. Kudos to you for being on standby to catch that one. But for those who had missed out just like me, well, we want to see price action come back to retest that structure to give us an opportunity to buy. So let's go back into the live chart here and look at what has been happening here. Price has just continued to climb higher highs, and it appears that price action may not come back to retest that level. So how do we intend to trade this? Now, I also want to call our attention to this bearish trend line, which has been supporting the bearish momentum since the beginning of this week. So when we connected the series of lower highs, see what we have here. We have a beautiful trend line consistently been respected by price action, though we had a breakout here on Wednesday morning, but we can see that price action rejected our key level again to incite another wave to the downside. Now, with this situation here, it is very important. Let's zoom right in, please, so that we can see things clearly. So you can see in the last couple of hours, price action has been trading just around that trend line. So it appears that we are at a critical point in the market right now where anything could actually happen. We could have price action break out of that trend line, and if it does break out of that trend line, then we have no other choice than to look out for buying opportunities in this market. But if it turns out that the breakout here becomes a false breakout, then price action dropping below the trend line will be giving us an opportunity to join the trend continuation to the downside. So how do we intend to trade this? Then definitely we want to have a key level around that trend line, which we are going to be using to guide our trading activity for today. So we have a psychological level exactly at the 1.2350 area, considering the round figure of that price, obviously. And this is what we are going to be using to guide our move going forward. So let's label this area for the sake of clarity. So we have the 1.23500 level serving as a yardstick going forward. So as long as price action remains above the 1.235, we continue to look out for buying opportunity and look out for more opportunities at the breakout of the 1.23720. And for those who are actually taking advantage of this move right here, if you are lucky enough to have taken that move, well, at this point, it is very advisable that you move your stop losses to secure the current buy position. And the most appropriate area seems to be just right above that 1.2320 area. Move your stop loss, lock in this position, and let's wait out and see how price action is going to be reacting to that level at the 1.235, which also shares a confluence with that bearish trend line. And this might take like an hour or two before something comes up. And it's very possible that price action might just continue to find higher highs in this market. So what I'm looking out for at this point, for those who are not yet taking advantage of this move, is to see price action come back to retest the 1.235 or the bearish trend line here. Look out for buying pressure. All this we are going to be looking out for. It's going to be on a lower time frame, like your 10 minutes, 15 minutes time frame, to look out for buying pressure that will support the trend continuation to the upside. And if it so happens we join the move, have a buy stop order above the 1.23720 to look out for more opportunity at this point. Well, from this current structure here, I will be advising that our TP target will be around the key level. But if you want to maximize the potential of this bullish momentum, if price action continues to the upside, you could extend your TP target to the 1.25 area, and then when price action gets into our key level at the 1.245, you move all stop losses, secure the current position, wait out to see how price action react to that level, then we take a decision from that point. So if selling pressure resumes below the 1.245, then definitely we want to look out for selling opportunities. Remember, this area has been a very strong selling zone since the beginning of this week, where every attempt by the buyers to break out of that structure had consistently been rejected by the sellers. So if it so happens that sell pressure resumes again, then we might get in for another wave of bearish momentum to the downside. And if we do have a breakout of that structure, buying pressure, please note that we want to see a breakout retest of the 1.245 before we are going to be adding more position at that point. And the reason why I'm saying this is simply because of the fact that that area has been a very strong selling niche since the beginning of this week. So let's be mindful of this observation. So that is that on the GBPUSD. So it's looking more bullish today on the GBPUSD. So let's see how far we are going to ride this move to the upside. The only way we are going to be selling at this point is only if this old breakout turns out to be a false one, where price action drops back below the trend line. And if it does drop back below the trend line, we want to look out for selling pressure below the structures to incite that wave to the downside. But if this does not happen, we continue to hold on to our bullish momentum. So as long as price action remain above the descending trend line and the 1.235 area, the 1.232 area, we continue to remain bullish on the GBPUSD. So if you have any questions regarding what I just explained, feel free to let me know in the comment section, and trust me, I'm willing to be of help in that regard. So I will be moving on to the next pair. I will be checking the comment section from time to time to see if there are any questions for me, and while I move on to the next pair. So the next commodity we are going to be looking at is the XAUUSD, that is the gold spot. And on the gold, it has been quite profitable for us this week so far, so good. So let's quickly run through how the week started for us on the XAUUSD. What had the situation here that incited the idea of either buying or selling at any point in time? We took advantage of a trading opportunity. So at the beginning of the week, we had our key level spotted at the 1,980. Remember, this level had been a major determinant of price action in the last couple of weeks. So we had this key level identified, and you know how we do it. As long as price action remains below that key level, we continue to look out for selling opportunities. And if price breaks out of that key level, we look out for buying opportunity. And what we saw here since the beginning of the week was quite interesting, as price action remained right below the key level at all the trading sessions we had this week. Now, at the beginning of the week here, we identified a choppy situation where price action was initially ranging between the $1,982.35 area and the 1,971. And you know how we do it whenever we have this kind of simple flat channel. We want to wait patiently for price action to give us a signal in the form of either a breakout of the resistance line for buying opportunity or breakdown of the support line for selling opportunity. And as you can see what happened here, we saw our price action triggered our first sell position for the week just right below the $1,971.50 level. And in fact, price action moved over 170 pips in our favor on that one before we begin to see another wave of bullish momentum building up around that area. And if you recall vividly, during our live session on Tuesday, we acknowledged the fact that price action is sitting right on a very strong demand zone, which was duly situated at the 1,957 level. And with the continued buy pressure around this area during our live session on Tuesday, we decided to buy after identifying a simple setup on the 15 minutes time frame. So let me show you what we saw on the 15 minutes time frame that made us to buy the XAUUSD. So this is what we had here on the 15 minutes time frame on Tuesday. So we saw this double bottom structure, a very strong reversal pattern, and then we identified a neckline at the $1,960.50 area where we were looking out for price action breaking out, retesting that structure to give us an opportunity to buy. And this was exactly what we saw during the New York session. I think a couple of hours into the New York session, we saw the breakout retest of that 1,960 to trigger our first buy position for the week. And we continue to add more position. Remember, we had the key level here at the 1,964, which also triggered another buy position for us. And we rode the move all the way to the upside. And immediately after price action got back into that our key level again at the 1,980, we begin to see sell pressure resume one more time. And we didn't join the sell move until price action broke down the $1,971.50 level, where we joined the bearish move to the downside. And during our live session yesterday, we acknowledged here this choppy situation going on between the 1,964 and the 1,957. And I told us all here that we want to remain very patient to wait for structures to mature. And with a flat channel like this, obviously, I told us here that we want to see a breakout, retest to buy the XAUUSD. That is, if price breaks out, retest, we would have seen a breakout of that bearish trend line to incite a bullish move. And if that does not happen, we said price action breaking down the 1,957 is going to be triggering our sell position. And this is exactly what happened. We saw our price action took out all the buy positions here, breaking down that level with a strong engulfing bearish candle to give us, how many pips was that? I think we had about a minimum of 170 pips. Remember, we identified this yellow window here as our TP target for all sell positions if price action breaks down that demand zone. And price action immediately got into that structure, and we saw a sharp rejection of that level, pushing price to the upside. Some of us will have taken advantage of this opportunity, but I missed out on that one, as this whole structure here happened during the midnight, and of course I was fast asleep at that point in time, so I missed out on that opportunity. But I made mention here during the my commentary this morning that we want to see how price action will be reacting to the 1,957. So let me show you what I said here on the XAUUSD this morning on my TradingView platform. So let's quickly run through this and see what I said.
Hello,
here.
Everyone.
So this is how we have been trading the XAUUSD so far this week. And let's see what we said here this morning as regards to the current market structure. So this was my commentary here this morning. So I said here, TP target it on sell position with 170 pips. And since testing the 1,940 zone, buy pressure has resumed. And I just missed that. Let's see how price action reacts to the 1,955, 1,957 zone for our next line of action. So if we go back into the live chart right now, you will see that as soon as price action got into that 1,957, we begin to see some reaction going on around that area. We saw that sellers resume around that point, but we are not going to be jumping into a conclusion at this point in time, as we'll still need some confirmation to happen around that area to give us an insight into if sellers are probably going to be gaining that momentum here, or it's going to be a false fake out that will shake out a whole lot of buyers in this market before price action continues to the upside. So in that regard, we want to remain very, very patient. But for those who are taking advantage of a buy position at the 1,940, if this falls within your daytime or your time zone, well, you must have taken advantage of that one. You want to be moving your stop loss at this point to secure your current position. So right now that we are going into the New York and London session today, how do we intend to position ourselves so that we can capture any opportunity at this point? So I would like to talk about the potentials of the buyers at first before we deliberate on what to look out for to sell the XAUUSD today. So looking at the structure and considering the fact that we have a demand zone that was broken here yesterday, there is a chance that this breakdown could turn out to be a false breakdown actually. And if it so happens that price action climbs back above the 1,957, which happens to be a territory for buyers in this market, we want to consider buying the XAUUSD. But we want to wait for confirmations to happen, which would reflect on the chart as a retest of the structure, and the continued buy pressure above this area will now give us an insight into the possibility that price might be going to the upside. And remember, any multiple buy pressure above the 1,957 is a very, very good sign to buy the XAUUSD today, as this is a buyer's territory. This level has been a strong buying niche since last week's trading session. We have seen how this level had been negating all sellers' attempt to push price to the downside. So if it so happens that price action breaks out, retest that structure, we look out for more opportunities to buy the XAUUSD. Then we also have a structure here at the 1,964 level, where if price action does a further breakout of that structure, as you can see here, should be welcoming more opportunity. Now, breakout of the 1964 is going to be a sign that the trend line here has been broken to the upside, hereby giving us a clue that the trend line may no longer have the capacity to negate any bullish attempt in this market. So a breakout of the trend line further confirms that buyers are getting stronger in this market. So let's see how far that bullish momentum is going to go. We continue to add more positions. Remember, we also have key structures at the 1971, 1980 to continue to ride the move to the upside if price action continues to break out to retest this structure. But trust me, I will be with you on both my TradingView and Telegram platform to give you updates as at when due. Now, in as much as we have looked at the potentials of buyers in this market, it is very important that we also consider the potentials of sellers. And if we look at what has been happening since the beginning of the week, and coupled with the fact that price action took out these buy positions, had that demand zone we identified had the 1957, it is quite reasonable that we also take into consideration that sellers could still be in this market. And from a technical standpoint, whenever price action breaks down a key structure just like the demand zone we have here had the 1957, we expect that at one point in time price is likely going to come back into that structure to do a retest of that level to inside another wave to the downside. So if that is going to be part of our purview, then definitely we want to be zooming right into this area to see if we can identify a reversal pattern, signs that buyers are finding it difficult to climb above the 1957 so that we can join that bearish move to the downside. So to do that right now, we want to scale down into a much more lower time frame to see how price action has been reacting to that level in the last couple of hours. So to do that, we are going to be moving right into the 15 minutes time frame here. So first of all, hold on a second. I want to take this one out. I don't want to see it on my 15 minutes time frame so that I can have a clean chart. All right. Okay, so let's go back into the 15 minutes time frame right now. So here we are on the 15 minutes time frame. I want you to follow me closely on this one so that we can be on the same page together and also be able to take advantage of a potential move here. So we can see here that in the last couple of hours we saw a sharp rejection of that 1957, and since then price action has been trading below the 1957 area. So for selling opportunities today, the 1957 is going to be our key level, and what we want to see here is a reversal pattern. In fact, I want to see something like a double top structure, a head and shoulder pattern around this area. So if you would allow me to give a visual representation of what I want to see here, if it's going to be a double top structure, I want to see inability of price action to break above the previous high and something like this. And then if this happens, we want to project a neckline area which we are going to be using to guide our trading activity, which might likely fall around that 1952 area. Let me see if that is going to work for us today. Hold on a second. I want to mark this out and let's see if, all right, okay, 1952. Let's label that area for the sake of clarity. 1952 level. Okay. Bring back our candle chart. And if we extend this thing out a little further, you will see that since the New York session yesterday, that area has also been a major determinant of price action. So if it happens here that price action gives us something like a reversal pattern where that 1952 serves as the neckline of that reversal pattern, so it could be something like this. Price finds it difficult to break the previous high, then a breakdown retest of that neckline area will be in sight in that bearish move to the downside. So we will be looking out for selling opportunities when price action breaks down, retest the 1952. It could also turn out to be a head and shoulder pattern where we have the right shoulder here, the head break out that 1,957 a little bit, take out some buyers from this position, those who thought that it's going to be a buy, come back down again, find a right shoulder, and then a breakout retest inside that bearish move to the downside. So these are things I'm going to be looking at while we continue to monitor price action around this area. But trust me, I will be with you on both my TradingView and Telegram platform to give you updates as at when due. So with this situation we have here, so this is what we are going to be using to guide our trading activity as regards selling the XAUUSD today. So we have a range here between the 1,957 and the 1,952. Now it depends on what happens here. It depends on what structure happens here that will determine if we are going to be buying or selling the XAUUSD today. So let's see how it plays out. Let's give it about 30, 40, 45 minutes for this whole structure to mature before we want to be joining any position here. But I will be giving you an update. Hope you are with me on my TradingView and Telegram platform. And if you are with me, trust me, you will get an update in that regard. So with that being said here, I do hope we are all on the same page. But if you have any question or you need me to make further clarifications into what I've explained so far, feel free to let me know in the comment section, and trust me, I'm willing to be of help. Now, moving on right now, we are going to be going into the last commodity instrument for today, which is the USDJPY. So on the USDJPY, we have been quite profitable this week so far. Remember, we have been buying this commodity since the beginning of the week. And this was our key level at the beginning of the week, the 137.800, which as you can see, price had remained above this level throughout the course of this week to emphasize the strength of the buyers in this market. Now, what we saw at the beginning of the week that made us to buy the USDJPY was the fact that we identified that price action was initially choppy. So we had a range between the 138.00 level and the 137.500 area, giving us a flat channel to work with. And you know how we do it here. Whenever we have this kind of simple flat channel, we want to wait patiently for price action to give us a signal, either in the form of a breakout of the channel to the upside for buying opportunity, or breakdown of the channel to the downside for selling opportunities. And during our live session on Monday, we had a sell stop order below the 137.500, which was never triggered, and we had a buy stop order above the 138.00 level, with the hopes that price action will break out of that structure. And interestingly, I think about an hour into the New York session on Monday, we saw our price action broke out of that structure, giving us about 70 pips move before price action went into a choppy situation, which lasted about, I think, 48 hours in this market before we saw that significant move that broke out of the 138.750. So we saw price action break out the 138.750. I think we had a stop loss here. Remember, we sold at this point at the 138.400 here, and we saw our price took us out of our position, giving us a loss of about 35 pips. But it's okay. We were able to recoup the loss we had, and we saw the breakout of the structure. Remember, we had the buy stop order above that area, and we had our TP target around the 139.700. Giving us about 95 pips in profit on that one. And during our live session yesterday, I told us all here that we are going to be looking out for another opportunity to buy if price action breaks out of the 139.700. And we saw our price action moved about 55 pips in our favor before this bearish momentum began. And I do hope that you moved your stop losses accordingly to secure your position, because that's how we do it here. Whenever price action moves significantly well in our favor, we always want to move our stop loss to secure the current position. And I normally share this on my public platform that we should secure our position at this point, as anything could still happen. And if you had done that, you will have been taken out of that position at that point. And right now, as we head into the London and New York session today, what is really going to be our plans here? Well, from this current structure here, it is quite obvious that after price action got into that area around the 139.700, we begin to see that the bullish momentum gradually was reducing, as we never saw that huge bullish candle that we have been witnessing since the last 48 hours in this market. Now that price action is back into that entry zone, how are we going to be buying or how are we going to be selling at this point? Now, the first thing I would like to say here is that let's talk about the bearish expectation in this market, and this is connected to the psychological expectation as regards to the last trading day of the week. And remember, I made mention at the beginning of the week of this session that on Fridays like this, we normally see situations where majority of participants in the market who had bought at a very cheap price, we want to be doing some profit-taking activity, which will reflect on the chart as a retracement or price action moving in the opposite direction of where price action has been going since the beginning of the week. Now, if we consider those who had bought at the 138.400, for instance, right here, who are bought at a very cheap price and price action moved this good, they want to be doing some profit-taking activity, which might likely reflect on the chart as a retracement to the downside. And if we are going to be talking about the bearish expectation here, it's looking as if this whole structure wants to transition into a reversal pattern in the form of a head and shoulder pattern. And let me show you what I'm seeing right here. So I see this impulsive move into the 139.700. We saw price action come into the 139.4. We saw the head where price tested the 140.235 area. And we might likely see a situation where price drops back, find the right shoulder, then break down the neckline here at the 139.400 to inside another wave of bearish momentum to the downside. So this is one idea I want us to keep in mind while continuing to monitor price action. So if it so happens that price action transition into something like this, breaking down the neckline at the 139.400, then at this point we want to consider selling the USDJPY. And one interesting thing about the breakdown of the 139.400 is the fact that it would have also broken down that bullish trend line that supported this bullish momentum since the beginning of the week. So the breakdown of both the neckline at the 139.400 and the trend line is a beautiful confluence to look out for a bearish opportunity in this market. So let's see if this is going to happen today, and if it does happen, we want to be on standby to catch that move. And trust me, I will be with you in the comment section to give you quick updates as regards to how we take advantage of this move right there. So in as much as we have talked about this one, let's go back into the bullish expectation. Obviously, it has been very bullish since the beginning of the week. As you can see, price action had consistently found higher highs, higher lows, higher highs, and we might likely see price come back into this area to give us another higher low before another wave happens. So if it comes into that area, we want to be very patient to see how price action reacts to this area. If it breaks down retest, then we want to see that as a bearish signal. But if we start seeing buy pressure above that level on our lower time frame, we get ready to buy. Now, what happens if price action does not drop to as far as the 139.400 and instead it continues to find higher highs? Well, at this point, if it does continue to find higher highs, we also want to be part of that move too as well. And for us to capture that move here, we want to zoom right into the current structure. And I want to acknowledge this area here at the 140.225, which is the highest point price action has gotten to this week. So for the sake of clarity, let's label this area 140.225 level and place it at the top right hand side of our screen right here. And what we are going to be doing here is to acknowledge the lower highs that we have been witnessing here since price action tested that level to give us an idea of what to look out for to buy the USDJPY today. And to do that, I would like to scale down into the 15 minutes time frame, which will make things look a little bit more clearer. So we have the 15 minutes time frame here. So I will bring out my line chart and connect the series of lower highs in this market to give me a trend line to work with for today. Now, in addition to that trend line, we have a key level sitting at the 139.800, I guess. Yeah, 139.800. Hold on a second. We are still going to do some readjustment there. So I'm going to give it a pink so that 139.820. I think it's 139.820. Let's use 820 level there and give this a pink color too as well. And then readjust it. Okay. Go back to our candle chart. So we have a structure here figured out. Now we have this whole situation happened here. So how are we going to be buying this one? Definitely we want to see price action break out of the 139.820 area. So we are going to be buying the breakout, a retest of the structure to take advantage of a bullish momentum. So if price action breaks out of the 139.820, obviously price action would have also broken out of that trend line, which will happen to be the first time price action will break down that trend line in the last 13 hours. So if that is going to be the case, then we want to be buying above that structure. And if we are lucky enough, we start seeing buy pressure above this area, it gives us more confirmation to add more position to our existing trade. And if price action goes on to further breakout of that 140.225, obviously we want to be adding more position as well. But if price action remains below the 139.820 throughout today and continue to find lower lows and lower highs in this market, then we are going to be looking out for selling opportunities right below the 139.850. So another psychological level we have there, and we are going to be using the trend line to guide our bearish momentum to the downside. So as long as price action remains below that trend line, we feel comfortable in our sell position. So we can actually maximize the bearish potential of this market even before the breakdown of that structure we identified on the 1 hour time frame. So we are going to be selling anywhere around this area. If we continue to see retest of this trend line, rejection, we try to sell, have a sell stop order below the 139.850, join the move all the way to the downside, and then the structure here, which is the 139.400, we could have a sell stop order at that point, then we could be joining that move to the downside. So that is how we are going to be trading the USDJPY today. But trust me, I will be with you in the comment section of both my trading view and Telegram platform to give you updates as at when due. I do hope you had a wonderful moment, and I'm very confident that we are all well equipped to be able to take advantage of any potential opportunity during the London and New York session today, as we were able to simulate all the potential opportunities that the market could present during the trading sessions today. So I hope you'll be on standby to catch any potential opportunity. And always, I'll be with you right in the comment section on both my TradingView platform and Telegram platform to give you updates as at when due. Do have a wonderful evening, everyone, and I wish you a merry and happy weekend as well. Bye-bye.